The forex market never sleeps, and neither do I. So let's go and see what the charts have to show us. Now, if you're new to the channel, my name is Nick, and I'm a top author on TradingView with over 260k reputation points. And every day I share a lot of free education and analysis on this channel. So make sure that you subscribe, and I will see you on the charts. In today's video, I will be speaking about USDJPY, a pair that at the moment has very interesting price action and structure. So what I will be doing is, as usual, first covering the technical aspect of this market. We will then check out what we have from a commitment of traders perspective. So what hedge funds and the non-commercials in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what do we have? Now here in the monthly time frame, we can see how this area was acting as very strong resistance here. We then had a break above the zone, break back below, basically creating this potential head and fake breakout to the upside. And at the moment, we have definitely the possibility of at least trying to print a right shoulder at this zone for a rejection to the downside. So here in the monthly situation is quite clear. We do have a potential regular head and shoulders, and anyway, we are testing strong monthly resistance that we do expect the market to reject to the downside. Going down on the weekly time frame, what do we have? Now here in the weekly time frame, situation is a little bit different, because even though we clearly notice that this area is strong supply and resistance, we can see how the market actually approached it with an extremely strong rejection to the upside, basically this green candle here, showing that even though we can expect a short-term correction, in the longer term, we can expect the market to break above this resistance. So what we can expect, at least by looking at the monthly and weekly, is some short-term bearish price action and then a longer-term bullish price action and continuation to the upside. Just a quick thing, make sure that you like, subscribe, and let me know in the comments below any suggestions for new videos. We go down on the daily time frame, and what do we see? Now here in the daily time frame, we can see how the market has just created this overextended W formation. Now, generally speaking, after the creation of an overextended W formation, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse. Now in this specific case, the daily impulse is from this low to this high. So what we expect, unless the market will first go higher, and in that case, obviously the 0.32 will move higher, is from here to see the market create a move to the downside to go and retrace to this 0.32 of the Fibonacci taken on this daily impulse. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials in the market are doing, we can see how this is lining up perfectly with what we already have seen from a technical perspective. In fact, we can see how we are currently sitting with a very bearish net positioning with minus 56k net positions with 78k shorts and only 22k longs, which obviously makes the JPY quite weak. So in the long term, we can expect more continuation to the upside, as we have already seen from a technical point of view. However, if we look at the last report, we can see how net positions have actually increased from minus 60k to minus 56k, with 3k shorts getting closed, actually 3.1k shorts getting closed, and 1.1k longs getting opened, which means that in the short term, we can expect some strength of the JPY coming from this longs getting opened and shorts getting closed from an institutional perspective, which should make USDJPY create a move to the downside because the JPY gets stronger, to then see the weakness of the JPY continue and therefore the strength of the USDJPY to continue. So at the moment, everything is lining up for a potential short-term shorting opportunity and then longer term longing opportunity. Now, the way in which we will be approaching this with students is as usual being reactive and not predictive. the monthly, weekly, and daily combined with the COT data. Those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, we will be monitoring price action from an intraday perspective during this move to the upside and only if the market will shift. From an intraday bullish to an intraday bearish market, only at that point we will be adding USDJPY to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on this daily impulse for a potential short-term shorting opportunity. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then every single day you get a new daily market breakdown showing you how to apply the strategies in live market. And you also get your questions answered every day in the daily Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description and I will see you in it.